Wall Street is a casino where the house always wins. Unless you are Jim Simons. He didn't play the game, he solved it, then he broke it. Most legends are stories. This one is math. The Medallion Fund generated 66% annual returns for 30 years. That is not luck. That is a glitch. Warren Buffett is the hero of the public. He doubled his money every few years. Simons did it faster. He made Buffett look like a retail trader. $100 invested with Simons in 1988 would be worth billions today. But you couldn't invest. The fund was closed. It was a private fortress. The secret was not inside the market. It was inside the machine. A black box located in a quiet town on Long Island, far from the noise. Simons was not a finance guy. He was a code breaker. He worked for the NSA during the Cold War. He hunted Soviet secrets in the static. He learned that chaos is not random. Chaos has a pattern. If you have enough data, you can find the ghost in the machine. You can predict the future. Wall Street hired boys in suits who played golf. Simons hired physicists who studied stars. He hired linguists who analyzed speech. He built a lab, not a bank. They didn't care about earnings or CEO interviews. They cared about the data, prices, volume, time. The raw numbers were the only truth. The rest was noise. The system was simple in theory. Find a pattern that repeats. Bet on it. Do it 1,000,000 times a day. Win 51% of the time. The machine began to learn. It saw relationships no human could see. It saw that rain in Paris affected wheat in Kansas. It traded commodities, currencies, bonds, stocks. It didn't discriminate. It just hunted for the inefficiency. It was a predator that never slept and never felt fear. Early days were hard. The system crashed. It lost money. Simons panicked. He turned it off, but he couldn't walk away. The math was too beautiful to fail. He brought in Elwyn Berlekamp, a game theorist. They rewrote the code. They made it shorter, faster. They focused on short-term trades. Get in, get out, survive. The new model worked. It printed money in 1990. It printed money in the dot-com crash. It printed money when the towers fell. It didn't care. This is the cold reality of quantitative trading. It removes the human element. There is no greed. There is no hope. There is only the signal and the execution. By 2005, the fund was capped. No new money. They kicked out outsiders. It became a machine that only fed its creators, a closed loop of wealth. The employees became billionaires. Secretaries bought mansions. But outside the walls, the market was changing. The banks were waking up. They wanted to build their own ghosts. Competition arrived. High-frequency traders, algorithms fighting algorithms. The speed of light became too slow. They needed to be faster. They needed to be closer to the core. The mechanism was perfect, but every machine has a breaking point. In 2007, the ground began to shake. The quant quake was coming. Renaissance technologies became a fortress. Employees signed ironclad non-disclosure agreements. One word to the press meant a lawsuit. Silence was the currency. They didn't just trade stocks, they hoarded data. Decades of pricing history, weather patterns, news feeds. They owned the past to own the future. The data was dirty. It had gaps. It had errors. Simons hired astronomers to clean it. They scrubbed the noise until only the signal remained. This was the edge. Wall Street looked at the headlines. Rentec looked at the hidden correlations. If the sun shined in London, they bought in Tokyo. The returns were impossible. 30%, 40%, 80%. It defied the laws of finance. It was a statistical anomaly that refused to correct. Banks lined up to lend them money. Leverage is a drug. If you win with $1, you win small. If you win with borrowed millions, you rule. Deutsche Bank gave them a basket option, a special vehicle to hide trades. It saved billions in taxes. The government was slow. The math was fast. The fund became too big. Trading slippage occurred. When they bought, prices moved up. When they sold, prices crashed. They were the whale in the swimming pool. Simons had a problem. Too much money. He returned profits to investors. He kicked them out. The fund became purely internal. Only employees could play. This created a cult, the golden handcuffs. If you left Rentec, you lost your investment. You lost your fortune. No one left. They were trapped by wealth. To satisfy the public, they opened a new fund, RIEF. It was designed to be slower, safer. It was the illusion of access for the common millionaire. Outsiders poured billions into RIEF. They thought they were buying Simon's magic. They were buying the leftovers. The Medallion Fund kept the prime cuts. The systems grew more complex. Machine learning, artificial intelligence. The code began to write itself. The creators no longer understood the why, only the result. It worked until the market changed. The quant quake of 2007 was a tremor, a warning. The models synchronized. Everyone rushed for the same exit. Competitors had copied the strategy. The signals were crowded. When one fund sold, they all sold. The feedback loop began. Liquidity vanished in seconds. They overrode the system. They sold manually. They survived. But the game had changed. The market was now a battlefield of algorithms. The trust was gone. Not inside Medallion, but inside the system. The banks realized that math could fail. The investors realized they were blind. But Medallion recovered. RIEF did not. The public fund lagged. The insiders got richer. The divide widened. The fortress walls grew higher. This was the calm before the real storm. 2008 was approaching. The housing market was rotting, and the machines were about to be tested. 2008, the global financial system melted down. Lehman Brothers collapsed. Banks vanished overnight. Panic swept the trading floors. The world was burning. But in the quiet office on Long Island, the machines were feasting. Volatility is fuel. When prices swing wildly, the algorithms find more inefficiencies. Medallion gained 80% that year. While families lost homes, Simon's computer bought them. It shorted the failure. It profited from the destruction of wealth. This success drew attention. The IRS looked at the books. They saw the basket options. They saw billions in tax savings. They called it a scam. The government argued the trades were short-term. Simons claimed they were long-term. The difference was $6 billion. It was the largest tax dispute in history. Simons retired in 2010. He stepped back. But the machine did not stop. It became autonomous. The creators left. The code remained. Power shifts. Robert Mercer took control. He used his share of the wealth differently. He bought influence. He funded movements. He weaponized the data. The money from the black box entered politics. It fueled Brexit. It fueled the 2016 election. The algorithm was no longer just predicting markets. This caused a fracture. Simons was a Democrat. Mercer was a Republican. The partners were at war. The firm was divided. The science became political. Mercer stepped down. The damage was done. The secret fund was now a public enemy. The veil of silence had been pierced by ideology. But the returns never dipped. The machine didn't care about the news, it didn't care about the reputation, it only cared about the spread. In 2020, the pandemic hit. Markets crashed again. Volatility returned. The Medallion Fund surged. 76% return. The world suffered. They prospered. But the public fund, RIEF, failed again. It lost billions. The disconnect was absolute. If you were inside, you were a king. Outside, you were prey. The IRS finally won. In 2021, Renaissance settled. They paid $7 billion. It was a drop in the bucket, a cost of business. Simons paid the fine. He didn't admit guilt, he just wrote the check. The machine had made enough profit to cover the penalty in months. The legacy was secured. But the mystery remained. How does it still work? 30 years of alpha in a market that destroys every other edge. Theorists say they front-run orders. Others say they manipulate prices. No one can prove it. The code is sealed. The employees are silent. The crash of 2008 destroyed the old Wall Street. The guys in suits lost. The mathematicians won. The quants took the throne. But victory has a price. The market is no longer human. It is a battlefield of bots. Simons built the first weapon. Now everyone has a gun. The era of the gut feeling is dead. The era of the algorithm is absolute. If you don't have the data, you don't have a chance. Simons built a monster, but monsters require a toll. His life was not a fairy tale. It was a tragedy wrapped in gold. In 1996, his son Paul was killed riding a bicycle. In 2003, his son Nick drowned in Bali. The algorithm could predict the price of wheat in Turkey. It could not predict the car. It could not predict the wave. He had $20 billion. He could buy anything on earth. He could not buy time. He could not buy life. Mathematics offers certainty. Life offers chaos. Simons retreated into the math. He poured money into research. He tried to solve the universe. In 2024, Jim Simons died. The architect left the building. The funeral was quiet. The world moved on. But on Long Island, the servers did not stop. The cooling fans did not spin down. The code did not mourn. The Medallion Fund traded that morning. It bought. It sold. It scalped pennies from the grief of the market. It followed the instructions. This is the true legacy of the quant revolution. We built machines to make us rich. Now the machines do not need us. The employees at Renaissance are still there. They are wealthy ghosts. They drive Ferraris to a bunker in the woods. They cannot talk about their work. They cannot share their code. They are keepers of a secret that consumes their lives. The fund is capped. You cannot invest. I cannot invest. It is a closed loop of capital extraction, a black hole for value. Wall Street tried to copy it. They built faster cables. They built smarter AI, but they are fighting for second place. The ghost is already gone. The lesson is not about math. It is about the removal of humanity. Simons won because he removed the fear. He removed the greed. We look for heroes in the market. We look for villains. We want a story. Renaissance proved there is no story. There is only data. The greatest money printer in history is not a central bank. It is a few lines of code in a basement, quietly eating the world. Jim Simons is gone. The wealth remains. The machine remains. It will trade tomorrow. It will trade the day after. It does not sleep. The market is zero-sum. For Medallion to win, you must lose. The ghost is not in the machine anymore. The machine is the ghost. 66% a year, every year, until the end of time, or until the power goes out.